Unfortunately, Mother Forex was not very kind to us yesterday either. I thought both trades that we had yesterday actually they were profitable there for a little bit. We had taken a buy on dollar Swiss where we had some profitability. We had taken a buy on New Zealand yen, which we thought was a good cross pair to trade based on the fact that New Zealand was holding up pretty well after they kept rates unchanged, and the yen being the driving force in the market this week. It's we get a bit of a reprieve today on the yen, I think, because of the fact that it was a bank holiday in Japan, so the Nikkei was not open. Here I can kind of show you what's shaking out in here. Let me go to let me go and show you what's kind of happening across markets. For those wondering what happened with the yen, I'll talk about that. I know some of you, you PitView students, maybe still have some questions on that. Hang Seng and Shanghai were both down. Hang Seng, Hong Kong was down 1.5%. Nikkei, they were closed, but this was all based on the Bank of Japan. This was from their Thursday, if you will. Their Thursday market open was down almost 4%. If you're wondering for the reason why, I chatted briefly about this yesterday, but the reason for this was the Bank of Japan. Some people call them defiant. They hadn't, even though they've been experiencing large amounts of yen appreciation, they had no changes to their monetary policy, which some people were just expecting them. I think people have just gotten used to Japan being being very aggressive in their monetary policy and their monetary easing programs, but they made no changes to it. Obviously, they left the door open saying they'll do whatever it takes, but the big question that comes along with the Bank of Japan is, does it work? The yen just keeps appreciating and they keep printing money, so it's not working. So that's what caused the big downturn in the dollar-yen pair. This is perhaps one of the bigger moves we've seen so far this year, even with the euro and the pound taken into the equation, of the yen coming down just since what would be Wednesday's close. The yen down almost 500 pips, 500 points. We thought we would get a pound bounce on the dollar yen yesterday. It was coming down towards these levels right down in here, and this is one of the reasons why we took the New Zealand yen, just looking for more of a dead cat bounce in the yen. What brought that New Zealand yen down was the fact that it depreciated even further, came down even further once Asian markets opened, even though the yen was, even though Japan was closed, still bringing down that dollar yen pair. So yesterday, what took a little bit of a hit, took about an 80 pip hit in my account, which so it's all in all, it's not even an average trading week at this point. It's it's certainly been a poor trading week, much like we usually say on Fridays. If you've had a bad trading week, you don't want it to be worse. If you've had a good week of trading, you want to preserve those profits, and so that's generally what we do. Fridays are generally about capital appreciation. When something's going bad, you don't want it to turn worse. When something's going good, you don't want it to turn bad. So, it is more about capital appreciation or capital preservation today more than anything. I do think there's opportunities, but, when we look at what's been happening with, and let me kind of zoom out in here, maybe not necessarily with the Aussie, but I know Nick was asking, what's going on with the euro. The euro is kind of going, the euro, the Swiss, the yen, they're kind of all in the same boat. There's nothing fundamental that's driving that euro up or that Swiss down. There's obviously something fundamental driving that dollar yen down with the Bank of Japan, and pound is even making some headway, making some slight higher highs and higher lows in through here. You see the dollar. So basically, when somebody asks, why is the euro going up? What's going on with the euro? It's more to the point of the dollar. The dollar, this large amount of selling on the dollar here on the yen. So these moves, a lot of them are just more based on dollar weakness than it is about any other currency strength. save the yen. We know why the yen's gotten stronger, because they kept their monetary policy on hold. I think that just kind of caused a chain reaction in here, where we have, dollars weak against the euro, dollars weak against the Swiss, weak against the pound, weak against the yen, weak against the CAD, sideways against Aussie. Aussie actually sold off quite a bit also based on that yen sell-off right in there. So you call it a little bit more sideways versus Aussie, but also weak against New Zealand. So a lot of these moves that we're seeing are more based on dollar weakness than they are against, really any other, except for the yen, any other currency fundamentally driving these trends. So, that's where it kind of takes us into today as far as, what we should look for. Global markets are pointing down. U.S. futures are currently down. I know the S&P futures are down 7. I think the Dow futures are down about 60-something points. The European markets are all down today. When you take a look at what's been shaken out in Europe, the DAX is down 2%. The CAC in France is down 2%. Financial Times is down 1%. The FTSE, if you will. So we're getting a broader base sell-off in the markets abroad. S&P futures down 7, Dow futures down 60, NASDAQ futures down 20. The reason why I'm showing you these markets once again is because, what's one of the big drivers of that yen going, of that yen strength is risk aversion, is risk off, if you will. And that's really driving that yen further into strength. The bright spot is we do have, oil's up almost 1%. So, I mean, you are getting commodities that seem to not be affected by this more global sell-off, if you will, in stocks. So when we look at strategies for today, the heck with strength on US dollar. I think we need to trade into weakness on USD right now, to go with that short-term trend. If that trend, carries over here to the end of the week. One of the reasons why we were looking for strength on the U.S. dollar was actually because, sometimes it pays to go against the grain a little bit, to be more of a counter trend type of person. The FOMC announcement on Wednesday, which we traded on Wednesday afternoon, the FOMC, the FOMC did open up the door for a possible June rate hike. It's not probable, but they left the door open. They gave themselves kind of the nod, if you will, that if they do decide to hike rates, that they can. So, that's one of the reasons why we were kind of looking for more dollar type of reversals, because some of these moves, folks, and if you wonder why I kind of get it's sometimes tough to be a technical trader, to look at both fundamentals and technicals in the market. Because we're in a market right now where the fundamentals and the technicals really do not match up. We went through this a little bit yesterday when we talked about, what should be happening. Well, in a perfect world, in a perfect Forex world, currencies should act a lot like the stock market does. If an economy is stronger, if they're in the midst of raising rates because they're getting growth in their economy, then that generally will lead to their underlying currency being stronger. That's how it was pre-2008 anyway. Strong currency, higher interest rates, or their Fed policy, or their central bank policy in the midst of raising rates, if you will, generally leads to a stronger currency. If you're in the midst of printing money and you have negative interest rates, and that's called diverging economies. So you get one economy that's going stronger, like the US dollar or the US economy, and then you have other economies that are diverging from that, like the euro, negative interest rates, huge QE, quantitative easing month to month of $85 billion. Same with the yen, negative interest rates, QE, Swiss, negative interest rates. That divergence between those economies, it causes a very confusing time when it comes to fundamentals in the market, because of the fact that if you're wondering what all the hoopla is around maybe the Bank of Japan and their underlying decision not to do anything with their monetary policy, a lot of it just comes down to, is it working? The euro is printing 85 billion euros a month, but the euro is still getting stronger, and they have negative interest rates, yet The euro is still getting stronger. The Swiss National Bank has negative interest rates, yet the Swiss franc is still getting stronger. The Bank of Japan is putting huge amounts of monetary easing out there in the market, huge amounts of supply of yen to the market. They are in negative interest rate policies also, but the yen is still stronger. And it's very hard in Forex trading when you're trading currencies, when you're looking to buy a currency and the fundamentals don't match up. And the way I compared it yesterday is, if currencies were stocks, if a stock had negative earnings, if they had no sales, revenue was slipping, they had chaos, they're borrowing money from the government to keep their money, keep themselves afloat. If they have those horrible fundamentals, you would not expect that stock to be going up. If they're, it's almost like if a company were to file bankruptcy and their stock goes up for some reason. That's where some of these economies are. And, it just doesn't make fundamental sense. Same with these currencies. One of the things that doesn't make sense to the central banks is the fact that the euro does not want their currency going up. The Swiss does not want their currency getting stronger. The yen does not want their currency getting stronger. But supply and demand, risk on, risk off, is just causing the opposite reaction to what they want in the market. And that's what causes a large amount of confusion, with not only traders, but, the central banks themselves. So trying to trade along with the technical trends today, I think you still need to look for, if we're going to look for anything today, we should probably point to more towards dollar strength. So let's start with one. One of the ones that would make sense today, and I'm not even going to look at cross currencies today, just because the cross that that we normally look at are yen crosses, and I don't think it's necessary to really look at any other crosses because the dollar is certainly driving weakness in the market right now. So let's take a look at dollar CAD first, because I think this one's kind of interesting as far as, oil's up today. They actually had their GDP report came out today. If you go over to Forex Factory, which wasn't awful, it came out in line with expectations at 0.1%. Our MPI came out actually above expectations at 4.5%. So, their main numbers, their high impact numbers, the IPPI, not really a high impact number, came out in line or better than expectations. And plus you have, some increase in oil prices. When you look at dollar CAD here, it's been subtly making these lower highs and lower lows every time it consolidates. And there's a nice little key level trade here also, where it's found its floor right down here at the 2500 level. You can see it found support right here at 2500. And we can, we generally like those levels where you have parameters 25. Here we go, 2500. You like it when we have that amount of support, that strong a support at a key level such as that. Starting to go negative now. Any type of dollar weakness we look for in the market, I think we need to look into basically just looking for our basic support and resistance style trades, and not really look to trade into any retracements, not here on a Friday. And let's go in here. Just kind of get these things set up a little bit. So, if we got things kind of matching up here on dollar CAD, you got to like the fact that oil prices are up even though stocks are down. I'm going to once again change my text properties. There we go. Put our stop right up above the swing high, 1.2. If it can break down the stop, we'd put it right up here at 1.25444. And in a way of us trying to get some money back from what we've lost this week, looking for a 1-to-1 risk reward. If we do experience further dollar weakness today, this one certainly has legs to do it. You can see how consolidated it's been. It hasn't been a big mover. So if we can get a volatility breakout here to the downside, I think it has plenty of room to make potential larger strides. If you wanted to look for a 1 to 1.5 risk reward, I would only do it if you can afford to do 2 lots on the dollar CAD. What that means is, you can go limit 1 to 1 risk reward, and if you can look for 1 to 1.5, I would want to take some profits off at 1 to 1 risk reward, move your stop to break even, and then perhaps for like a limit 2, you can look for a 1 to 1.5. But after looking for some other dollar strength opportunities this week, I haven't really been trading the dollar in either direction. I was just plain wrong. Sometimes you just got to admit that to yourself. What happened this week? Well, I was wrong. I was most certainly wrong. Definitely something you have to get used to. And of course, we'd be remiss if we didn't look at dollar yen. When we look at the yen, it's very tempting to want to go long, because it has been, it's coming down on this 107 level. But, the thing is that when you look at it on a daily chart of what's going on with the yen, is, yesterday this was our opportunity, and we took the opportunity to try to trade into a dead cat bounce on the yen here. That was yesterday, and obviously that didn't work out well for us, because we were looking for, the fact that it was coming down to the 108 level. We thought we could get a bounce. That's why we went long. It's one of the main reasons we went long on New Zealand yen, and we didn't get that. But when you look at where it's, what it's just now broken down below, here's about the 108 level right in through here, like 107.90. But it's the 108 level that's really been holding here on the yen, or was holding as a support level, and you can see right now it's breaking down through that level. So, as much as we might be tempted after something comes down this hard, usually when things come down this hard, especially with Japan and being on a bank holiday, you'd kind of expect them to have some kind of dead cat bounce, meaning, after that much selling on dollar yen, you would think that there could be something that would come into play that would give us some appreciation on the dollar yen pair, bring the dollar stronger. And this is much like dollar CAD. You look at where this support level is in here. You look at where all these really strong, it came down here, and look at how much consolidation there was in here. Bam. Horse pokes its nose through the fence line. Bam, bam. It's been trying and trying and trying. It's never made a close below that 107 level. It's just been sitting there. But markets are pointing negative once again here in the U.S. If we get another big sell-off, and the yen is in kind of no man's land right now, to where it's, it doesn't have any support really, unless you were to go back into what I think it would be like 2000, 2013 levels, or I'm sorry, 2014 levels, maybe even. I can check that here in just a second. But you know, if this turns negative once again, we'd want to look for entries. You know, go with the trend, if you will. You could look to be more aggressive, you know, potentially if you wanted to. Look for higher risk reward, but I probably would try to stay away from that. Stop, 1 pip. I'll write it under the strategies, but make sure you close all trades before 5 p.m. Eastern, before the close of the market today. I'll explain why here in just a second. Main reason I say close all trade strategies for today. You never know what can happen with Mr. Hirohiko Kuroda, who's the head of the Bank of Japan. You know, with them being on a bank holiday today and after the Nikkei going down almost 4%, the reason why I say close your trades before, you know, before the end of before the market closes is, you know, when the Japanese markets open, when you get the Australian markets start to open on Sunday night, and it could even happen over the weekend, is, you know, these central bankers, you know, sometimes when they see this type of movement, when they see their stock markets sell off by almost 4%, when they see their currency appreciate by 500 points because of their decision not to be more aggressive in their monetary policy, they could say, well, you know, whoops, we probably should have done something there. So let's, we changed our mind. We're going to go ahead and we're going to add more stimulus. We're going to go ahead and add to our monetary easing. You know, it can happen, but, you know, just so they can temper the fear, if you will, on what made their stock markets and their markets start to slide. So that's always that could be a strong possibility, to where if you're short something like the yen, if they don't do it, you know, we could probably see more depreciation of the dollar versus the yen, or the depreciation in this dollar-yen pair. But if they were to do it, if you were short on something like dollar-yen, which that's where we should be, you know, going with the trend, if we're short something like dollar-yen, you know, if they do come in and say, you know, we made a mistake, we're going to go ahead and we're going to start, you know, we're going to turn the printer on, then, you know, you could see this thing gap up and you could get gapped out of the trade. So we certainly do not want to see that. Tokyo markets, you know, that's, I didn't even know that, Phil. Thank you. I didn't read further on. I just know their markets were closed today. Evidently, their markets are going to be closed from the 3rd to the 5th. So thank you. So they're going to be closed to the mid part of next week also. However, the same thing still applies. They could still, during the holiday, come out and say, hey, when markets reopen, you know, at any point, they could come out and say, you know, hey, we were wrong. So but the same rule still applies, whether it be this weekend, whether it be early next week. But we just don't want to be in any type of short position on dollar-yen when we have a market close and open coming up. So I guess that was my main point, is you never know. They could come out during their bank holiday or whatnot and say, hey, we were wrong. It's happened before. Happened with Mr. Draghi before, during a weekend, when that was way back when he wouldn't acknowledge the remember back when he wouldn't acknowledge the euro as being part of their monetary policy, because the euro was so strong and it was causing their deflation pressure. And then he came out over a weekend and said, you know what, I changed my mind. The euro is part of our deflationary pressure. And so it is going to be, we do want this thing to get weaker. Question that just came up is, with the euro being, the scary thing about the euro, when you look at what happened up until this week, it's coming up right in through here. This is where it found resistance back during the April-March debacle that we had. It was right here around this 115 level. We had to go all the way back to, let's see here, April 12th, when it was coming up and hitting against these highs at like the 114.50 level. And you can see it made this head and shoulders top right in through here. Now that was another thing that made the shorting and going long the dollar, was a lot of these things were making more reversal patterns in the market. This is on a daily chart. I'm just showing you where this resistance level is, that it's really coming right up to in this case. You can see, if you look at it from an impulse move standpoint, it's been nothing but rising throughout the last week. It's just been coming up, coming up, coming up, coming up. If you're looking at it from like an hourly standpoint, what would constitute a reversal? You can see where this 78.6 level is here at 114. So to answer your question, because Nick's question essentially is, do I see any shorting opportunities? Well, yeah, when you look at how much selling pressure there was back here, and this is right at the 114.50 level, right where there was a huge amount of selling pressure in here on the euro dollar. I do see, there's obvious shorting opportunities, but you'd be selling into the trend, the most recent trend. But if you wanted to look for opportunities, since we know where that 78.6 level is, to give us a little bit more confirmation, and make no mistake about it, with the weakness in the dollar, this would be a counter trend trade, but it would be an awfully tempting trade if we can get some selling come in on the euro. Here's where that resistance level was. A reversal on the euro, you never know what can happen to the dollar on a day like today. What is it, about 9:32? Our market's just open. Dow's down like 58, S&P's down 5, NASDAQ's down 4, so we're getting a little bit more of a bearish tone in the market here right at the open. So calling this, let's just call this what it is. It'd be more of a counter trend strategy. We know that 78.6 that it's coming up to is right at like 114.10. So we might as well use like the 114 level. You see here it came up to 114, bounced off, finally broke through, came down and made a low right there. So that 114 level is where support would be. And this is certainly counter trend. I mean, this would be counter to the LP trend line. It would be counter to the PitView indicator. It would be counter to pretty much everything here on the euro. But if you were looking for it, it would be an aggressive trade to make. I'd probably look for a close below 114. And I would look for a total reversal on those 1 hour totals if you're using PitView. If not, if you're not, the 114 level is that key level. You could put your stop 1 pip above the swing high. limit of 1-to-1 risk reward, and you could go that direction, and that's not a bad play. I mean, that's, before I started class, kind of going back to my point on, you never want to make a bad trading week horrible. I was looking for some, for some dead cat bounces here on dollar strength based on what our Fed did this week, and based on, just the fact that a lot of these long, currency pairs are coming up to long-term support and resistance levels. So, the point is that I do think there's shorting opportunities. It's just all a matter of, of waiting for it. I'll put this on the trading sheet just so you can, it would certainly be one that I'd be tempted to take. If I did see that euro come down below the 114 level, I'd be extremely tempted, especially if I saw any type of shift in the imbalances there. And I'll put this in as an alternative counter trend. So yeah, certainly shorting opportunities exist. Yeah, this market's been a bit of a mess this week. This market's been a bit of a mess for a while. But if we're going to, I guess the point is, if we're going to beat our chests when we do well in the market, we got to be able to, take our punches when we're not doing so well in the market. So other than that, dollar CAD, I do like dollar CAD and dollar yen. I like dollar CAD just because, we do have, they had not good news, but, in line with expectation news come out this morning. We had, oil prices increasing. This is probably going to be the one that's closest to execution right in through here. Still waiting to see if we can get a break below that 2,500. I wonder what's happening. What's happening with the imbalances here on the CAD? Yeah, it's at like -1. There's a lot of room to go. I mean, it's no doubt that it's been consolidated. On a personal note, if I don't get anything before 12, which is only about, 2.5 hours away, I'm probably not going to enter into anything because I'm going to be wanting to close them out by 5 p.m. anyway, and I just don't think that's enough time for things to go in my direction. Dollar Swiss is much like the euro dollar. We were looking for the 78.6% retracement here. This is where, we had some profitability. Pardon me. We had some profitability in that trade on dollar Swiss. I think one thing that I do find interesting on like dollar Swiss as well as the euro dollar, it would be the same trade, whether you go long dollar Swiss or short euro dollars. You can see, just right in through here, how much buying pressure there was right at 9,600. And I thought one of the interesting candles that I saw here on the charts also, and it's breaking down below it, so it's almost a moot point, moot point at this point, but you can see how much buying pressure there was here on this. That's a dragonfly doji right in through there, showing a buying pressure right there as it's come down to that 9,600 level. Much like the euro dollar, as an alternative, if you were looking for counter trend strategies, you can see how this is coming down. If we get buying pressure come back into play here, you could, if this were to form something like a double bottom formation in here, if you see this same buying pressure come into play on dollar Swiss, and if we were to break above these highs, it's right at 9,600 right now. If you see a break through these highs right in through here, then once again, that would be much like the euro dollar. That would be your buying opportunity on dollar Swiss. They're both the same trade essentially. If euro dollar breaks down below one, I can almost assure you that if the euro dollar breaks down below the 114 level, I can almost assure you that the dollar Swiss will be breaking above this high. There's just such a strong, there's still just a strong, very strong correlation between those two currencies. There we go. And so these are all opportunities. The pound, out of all these, kind of the Aussie and the pound are the ones that look the most indecisive right now. Now, the pound, we were looking for selling opportunities on it yesterday also, and never quite gave us any. But, this is another one to where I think it's really faint in here, but I think there's like a little trend line. Yeah, right in through here. The pound looks like the one that's not giving in to dollar weakness as much as these other pairs. In fact, if you look at this as a whole for the week, pound looks more sideways than anything. And you can see this trend line, which I hate it when it does that. Let me keep on having to redo all my, I don't like the ray. I like being able to freehand them. So you see this trend line right in through here. This could, form like a, a head and shoulders top right in through here. That's what it's looking like anyway. Left shoulder, head. Right now, this is looking like a right shoulder. Before class started, you have this selling pressure right in through here. And yeah, we looked at that earlier in the week. Somebody said it's very close to a key level, and it is. It's right up in here in February. We looked at this the other day, remember? Where we were saying, okay, well, let's see if it can, when it was coming up towards those highs here, we were saying, okay, well, let's see if we can't get let the market go and see if we can't get a close above the 4,700 level, which would really be kind of the the break of that resistance. But it is right there. Much like the euro being close to a key level, so is the pound. The thing that makes the pound almost tradable in either direction is the fact that here's your long-term inverted head and shoulders, which it finally broke up through this week and closed above. So the pound is certainly one that has potential for a selling opportunity, since it is right close to that. It never did that this week. We thought it had a chance to break through that longer term resistance level, and it had not. That's one of the reasons why we've been looking for some selling opportunities on the pound. Is it hasn't been giving way to dollar weakness at all, and that's another one right in through there. Swiss, euro, pound. If you're looking for those kind of counter direction trades, counter trend trades, these all are giving very valid signals. As far as, not signals, they're not giving any signals yet. But if they were to break these key levels, they would all be giving pretty valid selling points as far as the European currencies go, for selling pounds, selling euro, selling Swiss, by going long on the dollar Swiss pair. So they're all giving some pretty good potential signals if they were to break through those levels, like right in through here, on the pound, you can see all the selling pressure right here, right before it broke through, much like dollar Swiss, large amount of selling pressure here. Got a trend line that's formed. This is another counter trend strategy. Where's this trend line at? 1.45825. Yeah, you'd have to see, it would have to bring the pain, but that's another one where you can sell if it closes below that trend line. It would be breaking through a very poor head and shoulders top pattern. Normally you like to see reversal patterns occur at the end of a steeper trend. But close below trend line, -5 on the 1 hour totals. You can certainly do a sell entry on that. Stop, I'd go 50 max. I wouldn't be wanting to put in a 60 pip stop on that. And you could look for a limit of 1-to-1 risk reward. So I'll go ahead and I'll put that one. That looks good too. I'm going to put these in as alternatives. My main focus would be trading along with the trend. That's why I brought up dollar CAD as our first candidate for selling there. Other than that, that's all I got. Unfortunately. Go ahead and save my trading sheet here. 429.16. Word document. One of the other reasons why I'd point out that I put that in as kind of an alternative counter trend strategy, and not to be too repetitive here, but just like I said at the beginning of the class, when you have a bad trading week, which it's been a bad trading week, you normally don't want to turn it into a worse, horrible trading week. You don't want to go from bad to worse. I think we've kind of all learned those lessons in life. If I choose a trade today, none of these have executed yet. I'm probably only going to do, I would probably stick with just doing one. I'm certainly not going to go in and overtrade and do, two to where I have the same, I don't want to put up the same risk I did yesterday where I have the potential for being stopped out on 2 trades and losing about 4%. That's why I didn't put in a third trade yesterday, because I have that drop dead rule, or that stop loss rule, if you will, of I can't lose more than 5% of an account in a given day, and I was right at about 4% yesterday as far as a loss goes. So I don't want to, I certainly don't want to be in that position again. So if I do a trade today, out of all the ones that we put on here, you could go into kind of you could go whichever one executes first as far as your strategy. I don't think there'd be anything wrong with that. Thank you, Mr. Darrell. You have a great weekend too. Today we're going to I wasn't able, obviously didn't even have any power yesterday, but today we're going to, I need to get several re-recordings done in our tutorials. So I mean, at 10:30, I'm going to be doing redoing the tutorial on, I kind of combined them, so it might be a long one, kind of like the trading basics from the other day, but combining a tutorial on currency characteristics. We've already got a cross-pair currency characteristics video done, and today I'm going to do currency characteristics on risk aversion and correlations, or risk on, risk off, and correlations at 10:30. I'm going to send you out a reminder here right after class is over if you want to join in with that. That's going to be the one we put in today. We were going to do Fibonacci's and Gartley yesterday afternoon because that's a little bit more of a longer live. That's a bit more of a live class that I was wanting to put on, so we'll probably have to delay that one till next week since Mother Nature unleashed her fury yesterday. Daryl said, at least yesterday I dealt with deflation well. My neighbor's flat tire. Yeah, I did deal with deflation much better than the Bank of Japan and the ECB. Nice, good one. All right, so there's your handout for today. I wish you all well. Don't do anything I wouldn't do this weekend. This weekend we have Comic-Con here in Indy. I don't know if you've ever been to a Comic-Con, but that's where we're going this weekend. So everybody have a good one, and I will chat with all of you later. Thanks for coming in. Bye-bye.